Crypto craze. What is it? Where's it going? And what it means for you.
There's a lot of speculation and it is a new system and it is something that needs to mature.
When government mismanaged money and inflation gets so rampant, there's a way now that people can protect their savings.
And DeFi, demystified. Is the financial system about to be turned on its head?
With decentralised finance, we're seeing really a parallel banking system rise up together with the existing banking system.
Welcome to our crypto special. It's been 12 years since the first digital currency was created during the global financial crisis. Since then, the price of Bitcoin has surged to dizzying heights, driven in part by true believers who think it's got a bright future and speculators who have a fear of missing out. It's a topic that many find a little confusing. So we've got David Chow to break it down for you with graphics by designer Alistair Croy.
Cryptocurrency, it's the new wave. It's what everybody's doing.
Ethereum is going to $10,000 and Bitcoin is going to $100,000.
I think what's going on definitely will come to a bad ending.
There's a good chance that crypto is the future currency of Earth.
The first and most well-known is Bitcoin, followed by Ethereum. There's a crypto for everything, including poo and pornography. And let's not forget that joke currency based on a dog meme that Elon Musk has been spooking.
It's a cryptocurrency you can trade for conventional money.
There are more than 5,000 cryptocurrencies out there worth over $2 trillion. That's almost as much as Australia's top 200 companies on the ASX. The idea behind digital currencies like Bitcoin was to create an alternative payment method which cuts out the middleman. That means instead of a bank recording when money leaves one account and reaches another, the user logs into their digital wallet with a private key, and the transaction is shared with thousands of computers on the decentralized Bitcoin network. They race against each other to verify the purchase by solving a complex math puzzle. The first of these miners to solve it gets rewarded with newly minted Bitcoin. Once the transaction is approved, a block is created. It's then added or chained to a shared list of all the transactions ever made. That's called the blockchain.
There's a limit to how many Bitcoins will be minted. That's 21 million.
Bitcoin mining consumes a lot of energy. In 1 year, it uses up more power than countries like the Netherlands. On the plus side, this inefficiency makes it practically impossible to hack, as it would be insanely expensive to tamper with thousands of computers worldwide at the same time. The first ever Bitcoin transaction was made more than a decade ago. Some guy in Florida bought 2 pizzas for 10,000 Bitcoin, which was worth about $40 at the time. But if he had held onto them, they'd be worth over $350 million. So that turned out to be the most expensive pizza in history. Bitcoin was created in 2009 by mysterious coder Satoshi Nakamoto. Since then, it's been a roller coaster ride with a few booms and crashes along the way. It surged to a record high of nearly $65,000 before losing half its value in a month. Thanks to Tesla boss Elon Musk. Tesla pumped $1.5 billion into Bitcoin and said customers could buy its cars using the digital currency, before Elon Musk quickly changed his mind over environmental concerns. Then he backflipped again, saying Bitcoin payments would be allowed if more miners used clean energy. China has also banned its banks from providing services related to crypto transactions. And a former US president weighed in.
Bitcoin, it just seems like a scam.
Se aprueba la ley en términos generales.
The first country to take Bitcoin as legal tender is El Salvador, and some say other nations might follow suit.
In underdeveloped economies, people tend to save in Bitcoin because their currencies are devaluating very rapidly. So Bitcoin gives them a chance to keep their savings.
But regulators are concerned that crypto transactions are relatively anonymous, making it popular with hackers and organised crime gangs for money laundering.
And once you've got the QR code, we zap that through.
Another reason why Bitcoin hasn't been taken up more widely? The transaction fees, anywhere from a few cents to $80 this year. Plus, it's slow. The network can only handle 7 transactions per second, compared to Visa, which can do thousands.
It's still quite a early adaption payment method, so I think they're going to have to work out their system and get a bit more stability.
Instead of spending their Bitcoin, most people are buying it just to hold on to it, like gold. Some see it as a safe haven asset to preserve their wealth in times of uncertainty, but unlike gold, Bitcoin is extremely volatile. It's not a reliable store of value as its price can rise and fall by thousands of dollars each day. Despite that, Bitcoin supporters reckon it's got a shiny future.
Well, for more, I'm joined by AMP Chief Economist Shane Oliver and founder of Finder.com and crypto exchange HiveX, Fred Shabester, to discuss the benefits and pitfalls of cryptocurrencies. Shane, I'll begin with you. You recently wrote that digital currency and blockchain technology may have a lot to offer, but you don't think that Bitcoin will cut it as a digital currency. Why is that? What are the pitfalls?
Well, there's a whole bunch of reasons for my scepticism. Firstly, as a currency, it has to be acceptable as a currency. And the trouble is that to do a Bitcoin transaction will take you typically about 10 minutes. And that's a function of the way the Bitcoin miners have to validate each transaction. The average cost is getting higher and higher per transaction. We're running at around $30 a transaction. It's incredibly volatile. So if you're looking to spend some Bitcoin, you don't know whether it's going to be up 20% or down 20%. So that gives it a degree of unreliability. On top of that, there's a whole bunch of other issues. It's vulnerable to hacking, security issues. Recently, we saw the FBI get into Bitcoin, a Russian hacker, and get the money back from a ransom attack they'd had on a US company. So that raises questions about its security. It's bad for the environment. Bitcoin.
I just reject all of those things.
You will get a moment in
Firstly,
just a second.
Lightning Network is free. It doesn't cost anything, and it's instant. The second thing is fundamentally Bitcoin's never been hacked. It's not been hacked, and that's just there's too many petahashes protecting it. Maybe that computer got hacked, but it has never been hacked, and it is open source. If it would have been hacked, the whole thing would have gone to zero. And anyway, if the hackers hacked it and it went to zero, they would be hacking their own money anyway.
But I think what Shane was discussing there, alluding to, was the US authorities were able to get back the Bitcoin from that ransomware attack.
We don't know how they did it, but they managed to get in there and get it back.
But they just hacked their computer and got it back.
OK. Well, I'm going to give you a moment in just a second, Fred, but if you'd like to finish.
I mean, the flip side, an aspect of that is if your bank account is hacked, your bank will reinstate the money. So you've got another authority backing you up, whereas Bitcoin, you're on your own, basically, or any other cryptocurrency. As I was saying, it is bad for the environment. The security that supposedly comes from Bitcoin is the mining activity that's generating more and more, or requiring more and more computational skills or algorithms to be solved, which generates a lot of electricity use. So at present, Bitcoin is using the same amount of energy per annum as a country like Sweden or Argentina. On top of all of this, I kind of wonder whether governments are going to crack down more hard on it. Will governments want to give up on their own currencies? Will they want to give up on their control of their monetary policy? And why won't they just do it themselves? And I reckon that's probably going to be the path they'll go down.
All right, well, lots of points there, Fred. You run a crypto exchange and you want to set up Australia's first crypto bank. Why do you have such faith in the sector? And how can you mitigate against some of these risks that Shane just outlined?
Well, the most energy actually goes into the ground. Any energy, if most amount of electricity that's produced, gets actually put into the ground because we actually are very inefficient in producing energy. Energy only actually goes to where the market wants, and right now it's going to Bitcoin. So all those fairy lights, Netflix people, GIFs on the computer, all that kind of stuff, yeah, the energy is going there, and you could say maybe that's one thing it's being used for. But what about actually protecting a network which allows people to control their money, escape financial systems, which, like in Venezuela, high inflation places like Argentina, do instant transactions on the Lightning Network, which costs $0, by the way. And El Salvador, as a country, just ruled it as legal tender. In other words, legally, a vendor must accept it. And the reason why I have so much faith in it fundamentally is that you can now exit the financial system.
So given that you're looking to set up Australia's first crypto bank, how big a challenge do you think that this asset could be to the traditional banking sector, especially when we know the points that Shane just made, it's volatile, there are some issues with security around it, as we've seen, and it could be subject to further government regulations?
I think government regulation is great. Bring it on. And right now we're having a Senate inquiry in fintech led by Andrew Bragg. And he's a great senator and he understands the space, and we're about to put more regulation and legislation around it. And finally, it's getting more recognised. The ATO's written about it. Jerome Powell talks about it as digital gold as well. Essentially, if you want to break this down, Bitcoin is just digital gold. It's not a big deal. It's this new thing. It is a revolution. At its core for us as if we were going to offer a crypto bank, there are things now where banks don't give you interest anymore. They don't give you. They take your money.
In a low interest rate environment.
Yeah, all around the world, yield's a problem. We compare rates all around the world. It's about 0.5, sometimes even negative interest rates. And we want to change that. We want to create a bank where actually the bank pays you money. Now, unlike any other fiat currencies, cryptocurrency allows you to stake your coins and you earn interest. And that's unique. And the reason that's possible is because it's decentralized and run by the people.
Okay.
I think all those things are fantastic. And I can understand a desire to get away from government, which at times have inflated or deflated the value of their currency. But I'm not entirely sure that Bitcoin is going to be it. There's 9,800 coins out there. Many of them were created as a joke. Their value or their price is often dependent on the whim of a billionaire, what he says on Twitter or a rumour flying around. It's very hard to put a fundamental value on any of this. And it's all very good to say, well, we're going to pay an interest rate, but where's that going to come? Bitcoin does not generate a rent or interest or earnings.
I reject that.
It's not an
entirely.
asset producing anything per se.
You rent it to traders. So traders who want to trade it, you rent it to them. It's between 2 to 4%. This is a massive market already that's has around, I'd say, $20 to $25 billion of cryptocurrency staked into it. And it's the entire reason why this market, Bitcoin price, hasn't tanked as far, because everyone's staking their coins and they're long-term holders.
But it has tanked, hasn't it? Almost 50% in the last few months.
But it's past its all-time high of 20,000. And when it was $1, it was a bubble. When it was $10, it was a bubble. It was $100 a bubble. 1,000, 10,000. When are we going to finally go, okay, this is going to last?
Okay, only a minute or so to go. What does the future hold for cryptos, Shane?
To be honest with you, I reckon governments will do it themselves. And the reason is that to get people adopting it in countries like Australia, where there is faith in the Australian dollar or the US dollar, unlike El Salvador, which tend to rely on the US dollar, people are only going to adopt it if they can see it backed by the government, if they can see someone backing it. I can't see people adopting Bitcoin or any other cryptocurrency if it doesn't have that backing.
Okay, and for you, Fred, I mean, I know that I've read that you're paying your staff in crypto. There are other businesses that are doing that as well. Where does this all end for someone like you in your space and the business? Where can it take you?
I think we're about to create the new financial system, and every single financial institution is scared because we're bringing the new system where the people control the money and the actual systems are decentralised and it's not controlled by one central authority. And so we're going to change the game.
Is there a danger in that, though? Because we know that, say, currently in a traditional banking system, if someone takes money out of your account illegally and is hacked, that bank will usually stand by you. But with a crypto bank on a wallet, that doesn't necessarily happen. I mean, you lose your password, you might not even have access to your account.
Yeah. So if there are many instances if you look at fraud, let's take fraud as a bigger example. There are lots of instances of fraud with banks where they don't pay you the money because you've contravened their terms and conditions. There's all sorts of schemes that have gone on through COVID, all sorts of things. And if we're talking about actual money, what that fiat money is currently doing, what do you think happens with all the cash right now? We should probably have a little question mark and inquiry into that versus having a look at actually Bitcoin, which is tracked by the blockchain. And the reason why the feds can actually find what it is because it's all publicly displayed.
Fascinating to chat to you both. We are out of time, but thank you both for your time. Fred Chebest, Shane Oliver, thank you.
My pleasure. Thank you.
Thank you.
Well, while there's much debate about whether Bitcoin will ever become a mainstream currency, central banks are exploring the technology behind it, the blockchain. Experts say, just like the internet, it could shake up the world as we know it. David Chow reports.
Imagine a world without banks, accountants, and insurance companies.
Does your insurer help you?
Where you can buy a house without real estate agents.
Where do we go from here?
And borrow money without having to go through financial institutions. That's the vision behind DeFi, or decentralized finance. Blockchain technology was first created to buy, sell, and mine Bitcoin. Since then, other cryptocurrency platforms have taken it further, like Ethereum, which allows decentralized financial services on its network. But first, here's how blockchain works. Blockchain stores all the transactions ever made in blocks. That means information in a particular block can't be rewritten. It must be stored in a new block and added to the chain. When a transaction is made, thousands of computers race against each other to solve a complex maths puzzle to verify it. Once it's verified, the information is shared across the network and a new block is added to the chain. By decentralizing that information, it's harder to tamper with. That's supposedly why you can trust it.
With decentralized finance, we're seeing really a parallel banking system rise up together with the existing banking system, and it remains to be seen how big it becomes.
What's special about Ethereum is that users can build dApps, or decentralized apps, on its blockchain, like software that runs on a computer. These dApps are powered by smart contracts, which cut out middlemen like bankers and lawyers who are there to manually verify that both sides have fulfilled their end of the bargain. Instead, the terms are in code, which have been programmed to, for example, transfer money into someone's account automatically when certain conditions are met.
The cryptocurrency world is heavily manipulated. There's no doubt that there's a lot of manipulation going on, and it's effectively operating in unregulated space.
DeFi is a fast-growing market worth about $50 billion. You can exchange cryptocurrencies on platforms like Uniswap for stable coins like DAI or Tether, which are supposedly pegged to the US dollar to reduce volatility. And there's platforms like outweigh, which allows you to anonymously lend or borrow crypto.
If you're investing with a cryptocurrency because you want to make a quick buck, well then you're just as likely to lose that buck quickly. Nobody ever went to the trouble of setting up a cryptocurrency as a philanthropic project in its entirety.
Also on Ethereum's blockchain are NFTs, or non-fungible tokens, which are shaking up the world of art and collectibles. Even the source code for the World Wide Web has been turned into an NFT, a digital certificate of ownership that can't be forged or tampered with. The world of mainstream finance also wants in on the action. The Reserve Bank is testing the idea of a digital Australian dollar, while countries like the US and China are also looking into something similar. Blockchain is also being used in the meat export business. Warwick Powell's company tracks cows from Australian farms to other countries to verify the quality of the meat.
People can independently interrogate the claims that are being made by suppliers about where something's from, what it is, when it was done, who it was done by.
The ASX hopes to launch a blockchain clearing system in 2023 to make buying and selling shares more efficient. But it's still early days for crypto, blockchain and NFTs, so be mindful of the risks.
Well, let's get more on NFTs, or non-fungible tokens, which are revolutionising the art world. As David was explaining there, they're unique and authenticated by the Ethereum blockchain, so you can prove that you own the original. NFTs can also contain smart contracts that give the artist a cut of the future sale of the token, as Amelia Terzon reports.
Jess Lambie has sold this painting twice, once as a physical canvas and again as a digital reproduction with a token known as an NFT.
The original painting sold for around $950 and then the NFT sold for $1,200. It sold for more than the original painting did from the exhibition, so that was absolutely insane.
The concept behind non-fungible tokens has gone mainstream since the artist Beeple sold this digital piece at the auction house Christie's.
I didn't quite get that I could paint something and then mint it and turn it into an NFT art. Like the entire concept of that didn't make sense. That virtual token is the verification of that artwork, and inside of the blockchain it has all the information. It has the artist, it has who's bought it, how much it went for.
America's NFL is also getting in on the craze with sports collectibles. Grammy winners Kings of Leon have used the technology to release an album. And the founder of Twitter has sold the rights to his first ever tweet as a token. Jess Lambie's friend Tim Meyer is finding the digital space more lucrative than the traditional art world. Every time his NFT artworks get traded, he gets a cut.
Those pieces get resold, and when they get resold, there's a commission structure.
That gives him a steady income.
Now you've got a space or a whole kind of ecosystem that's teaching artists how to monetize.
Blockchain experts say that even if the bubble bursts, the concept is revolutionary.
I think the hype is a really strong signal of underlying trends that are significant and meaningful and here to stay.
The trend is still in its infancy, so there's also many legal questions over true ownership and copyright.
There's definitely so much catching up in terms of the law and this space around blockchains, considering how fast the space is evolving.
The token trend is already before our eyes. This piece at the National Gallery of Victoria in Melbourne is by the internationally acclaimed artist Rafiq Anadol, and he says from now on everything he does will come with an NFT. An art movement for the digital age.
For further analysis, I was joined by entrepreneur, investor and corporate advisor Mark Carnegie and Professor Ellie Rennie from RMIT University's Blockchain Innovation Hub. I began by asking Mark how big a challenge DeFi will be to the traditional banking model.
Well, I think it's going to be a huge threat over time. What I've said, and I'm on the record as saying, is I can't tell whether the whole of the crypto bubble comes and goes and everyone loses all their money. And what happens is the incumbents modify their existing systems and procedures enough to make that happen, in which case still the world's a better place, but the crypto investors have got wiped out. Or, in fact, some of the models like Ether have got enough momentum about them to genuinely become a big part of the world financial system.
So what do you see as the benefits of decentralising the banking system, Mark?
I think it's just going to take frictional costs down.
Ellie, you're working at the RMIT Blockchain Innovation Hub. Do you think it's possible to safely decentralise the banking system using this underlying technology of blockchain?
I think it is, and I think it's already happening. It depends what you mean by safely and for whom. One thing to keep in mind with these protocols is that they're open source, so it's quite transparent. You can see the code. But as a result of that, you also get others coming in and copying that code who might not necessarily have the same responsibilities in how they're doing it.
Well, Mark, I know that you recently set up a new digital asset fund which holds some Bitcoin, which is for more of a momentum trade. But what sort of interest are you seeing? What sort of investors are coming into that?
The core of what we're doing is finding wholesale investors who want to find a mainstream fund manager who's willing to go into this space. And our product promise has been that if you put a material amount of what are called stable coins into a portfolio at the moment and stake those stable coins, you end up being able to create what the financial people call alpha, that is undiversified returns. And people are finding that an appealing thing to look at. There are a whole series of young people who are crypto natives who know exactly how to play these things, have got their own interest in what they're doing, and part of it's investing and part of it's like a day at the races.
So, Ellie, what further innovations might we see in this space?
What we might see, I think, coming out of this increasingly is integration, not so much with banks necessarily, but maybe neobanks that are giving people the capacity to earn greater interest through these protocols, through what are essentially automated processes going on in the background.
But Ellie, just on safety, what happens on the Ethereum blockchain if your money goes missing?
Interestingly, there is a native insurance industry emerging. companies like Nexus Mutual, which can give you some kind of coverage when you're using certain protocols. So in that respect, we're beginning to see these ancillary services that I think are quite necessary for a healthy financial system emerging. But yes, there is still a huge amount of risk. But at the same time, what I think I really want to reinforce here is that these protocols are not necessarily owned and managed in the typical way that we think of financial services. There's huge communities of users and they have power over what happens with these systems.
Also, Kathryn,
Yes.
I think people have got a very short memory if they think financial systems are safe. Look at the GFC. In the end, the government had to step in to guarantee the world financial system. It's safe because they decided to print money. It's not safe because it's safe. The fraud that happens all the time is safe because you're essentially charged huge amounts of insurance embedded in all the fees you pay all the time.
But Mark, what would you say to someone like Nassim Taleb, who says Bitcoin is a failed notion of a currency without government, it's not a store of value, it's unreliable?
Being digital native, understanding what is going on in this space is immensely important. And, you know, Nassim understands the arguments and the frailties of Bitcoin, but I think he's done an incredibly poor job of continuing to understand the rest of the decentralized finance. I can show you examples at the moment where somebody can more easily turn Bitcoin in Australia into local currency in Burma in the face of a government crackdown than they can use any traditional system at the moment.
Well, Ellie, let's talk about NFTs. How much growth do you see in this area? I mean, we've seen a lot in the art world, but it's really going further than that now, isn't it?
I do expect more growth in the creative industries. Beyond what we're seeing in digital art, I think anything that actually creates a digital twin that ties a thing to a contract that shows ownership is going to benefit from NFTs over the long run.
I agree with her about NFTs, but I'd go even further there, where I think that your ability to reimagine intellectual property in a crypto world and then morph it or graft it back onto the real world, nobody's really spent the time thinking through how that's going to play. And there is a huge amount of running room in that area.
Well, the options seem unlimited right now. Mark Carnegie and Ellie Rennie, I'd like to thank you for joining us on The Business.
Thank you very much.
Thanks, Kathryn.
And that's all from the Business Crypto Special. For more on those stories, you can go to our website and click on the business page. You can also watch the show anytime on iView. I'm Kathryn Robinson. Thanks for your company.